Anand Deshpande, who's founder and CMD of Persistent Systems, joins in to talk about their numbers. Mr. Deshpande, good to have you on the show. First up, your margins are the highest in 15 quarters, aided by offshore shift and business mix. Would you be able to maintain these margins going ahead?
See, I do think that there are some more levers available for improving margins, predominantly by improving the rates that you get on the projects and also by improving the offshore mix, which I expect to grow further in terms of the offshore on-site ratio. That said, some of the challenges that we will have would be including in trying to enhance the sales team, and the cost on the sales side will also go up. So I think maintaining margins somewhere in the the EBITDA of 18 plus is a reasonable number that we see happening. This quarter was a good upside, and we do have more room for that. But I think this is hard to predict on a long-term basis as to retaining that particular margin for a long period of time.
You're poised to close the year with single-digit growth. This could be one of the lowest amongst your peers. What is the outlook for recovery going ahead?
No, I think we do see continued support on the digital business to grow, and that has to be the main lever for the growth of the business. Some of the numbers that we have had on the alliance side have been disappointing last quarter and during the last year as well. So that has been a challenge, and they constitute almost 30% of our business, and that has had an impact on the IP side as well. But I do expect that next year some of the numbers that we are seeing from our customers look relatively positive. So it's kind of hard for me to give you a precise number at this moment, but I think the signals that we see on the ground are fairly positive. So I do expect the bounce back to happen in the next year.
Okay. So Anand, going by the cash on your books, could buyback size have been greater as the payout this time is shared with dividend as well?
So the cash on the books is about 1500 crores at the moment, and the distribution has been a combination of a dividend, which is about 8 rupees per share, and a 225 crore buyback. The buyback is limited on the 10% of the net worth of the company, which is the part that can be done easily without having to go back to the shareholders for approval. So the board can approve 10%, and this is the maximum that the board can approve on their own. So the 225 crores got picked up as a 10% number that we could get.
Right. So actively, what kind of inorganic opportunities are you assessing, pursuing to bolster growth next year?
Definitely, there is a plan to look at acquisitions and inorganic growth. However, it's very hard to predict that it will happen in the next 1 quarter or 2 or 3 quarters. We have an active pursuit in terms of looking at deals in that context. But some of these things take much longer than one anticipates.
All right, Mr. Deshpande, we leave it at that. Thanks very much for joining us this morning with your quick review of your earnings.